we have different brokers, right? You can choose anyone you like, but they are all almost the same. The only issue with some of them is some some of them, like Binarycent, I think some pay higher, their percentages here are higher than some. Then when you want to withdraw, you might have issue with some than the others. But the basic trick with these brokers right now is not a lot of people actually read their terms and conditions before they put their money on. So a lot of people tend to have issues with them. Now, once you can understand their terms and conditions and you read about them, for example, now, a lot of people, when they want to fund their account, right, they put, they put how much they want to go and they enter this bonus without actually reading this bonus policy. And it is clicked there already for them. So they just like click the bonus and they get 375 for the 250. And they like, think, okay, the money is just there. By taking the bonus, there's something you are agreeing on by taking this, which is very simple. If you are taking a bonus on your money, you are agreeing to them that, okay, you are both coming to an agreement that whatever the amount, total amount of this money that you are getting at the end of the day is, you multiply that money times 3 before you ever request for a withdrawal. That means you are both in agreement that you will not request for a withdrawal until your total account is times 3 of this. And once it's times 3, I think the bonus they are giving you is even yours already there. Then you can request for a withdrawal. Now, where some actually follow that rule, where they have issue after following the rule, maybe they actually do, or they've actually grown their account to like the expiry of that amount already, right? Where they have issue is they then want to withdraw everything all at once. There is no business person, nobody in business that will like want you to come in and make money of them and just take your money out. Even bank at times when your money is heavy and you are requesting for your whole money at once, it's kind of bad because it's business. So now a lot of people want all their money at once, which is kind of hard for these guys to give you. So they try like they try doing some tricks, maybe messing with your account or whatever. So these are the rules to all these brokers before you start. If you know you are taking a bonus, just know you are trading for a long time. You are trading for a long time. You are not like, okay, you want to trade, maybe you multiply the account times, so maybe you double the account, then you want to withdraw. No, you are like, I'm trading with this money, but it's not something I want to withdraw anytime soon. You get. So, but if you are not taking the bonus, there's a condition to that as well. If you are not taking a bonus, automatically any money you are putting in their account, in your trading account, you have to multiply that money times 2. You have to double your account before you ask for a withdrawal. You have to double your account before you ask for a withdrawal. And even after you double your account, it's not like you request for the 100% of your account. So now this is a simple rule so that you won't have any problem with any of these brokers, right? Number 1, if you know you want to do long term, it's not like you are trading to just double your account in 1 week, which we eventually get your account blown. We'll go through money management later. But if you know you want to trade for a longer time, this thing is something that is meant to be done for a longer time actually, which is my own advice for people. Most times when people ask me, should I take the bonus, I kind of tell them to do. You know why? It will kind of give you that discipline, like control that thought of withdrawing anyhow. So you are like, okay, you are in this for a long time, you get. So you are not, you don't even cross your mind to want to withdraw anytime. So at times, some people take the bonus to kind of discipline themselves from withdrawing anyhow. Are you getting me? So some people actually take the bonus to discipline as well. And at the end of the day, if you are like strict and disciplined with it, the bonus will be yours eventually, right? So that is that. And after you have actually multiplied, grown the account to like 3, don't request for more than 40% of that account at a time. You can request for like 30 to 40% of your account. So that way the brokers can trust you. Like, okay, you are not here to come and take all our money and just leave, right? Because eventually what happens to most people, that's why you see a lot of complaints online. What happens to most people is they start giving you excuses. Like, okay, while they are giving you these excuses, they know you might be tempted to trade again. Meanwhile, they've already tampered with your account. I don't know how they do that anyway. But just don't request for 30 to 40% of your account at a time. After you've requested for like 30 to 40% at once, maybe after you traded more, you gain more, you request again. By the end of the day, you've seen that you've gone more than how much you actually deposit. So this game is not a short-term stuff, it's a long-term game. You should know you are getting into this long-term. You are growing this account long-term. So it depends on, okay, how long do you want it to be? If you know you are not going fully like long term, you might need money anytime, then I will advise you not to take the bonus. So easily after you've doubled your account, you can at least get some of your money anytime you want it. Not all, some of your money. So that is that about account funding. If you are taking the bonus, you know you are going a long way. If you are not, you are still going a long way, but not that long as the taking the bonus. So that is that about account funding. So now let's go about the broker itself. They are all always the same. You have once you understand one easily, you can trade on any other one. You can trade on any platform you want. You can trade on any platform you want. Let me show you another one. So now you can see the platform here. There is no, the difference is not much. If you go to the account funding here as well, it will just bring the same thing that the other one brought the other time. You can see it's all the same. You see here, they are offering you 50% bonus as well. A lot of people don't read the agreement. They just click the 50%. Like you see, instead of $1,000, they get $1,500 without knowing what is attached to it. At times they give you promo code to even give you almost 120% bonus. Like, you know, to them, the more the bonus they are even giving you, the more the money you have to go that account to. So the longer it is for you, the longer it is for you. So it just it's just better for you to know what you're getting into before you start. So now you can see the same thing. So once you understand one, you can easily understand the other. So on the left here, you can see that the other time when I was explaining on the trend and everything, those pairs you are analyzing on your trading view, this is where you choose them on your broker's platform to trade them. Let's say after you've analyzed your GBP USD and you want to trade it, once you enter your broker here, You click the GBP USD and it's going to bring the GBP USD for you here. Are you getting me? It's going to bring the GBP USD for you here. So these are where the currencies are at. You get? That is what here is for. You see this middle place, you have no business with it. The trader concept, the copy trading, you don't need it. You are trading yourself, you don't need anybody to trade for you. You don't need a robot to trade for you. At the end of the day, you just see that your whole money is gone. Some actually works the time, but you can give it a trial. I don't know. I think the purpose of this class is for you to trade yourself. So now, this option trade, we have the two ball intraday and locked up. You always leave it at the two ball because that two ball is the binary we traded. We are binary traders. We are not intraday or long-term traders. We want to get in between 5-10 minutes and we are out. If you choose the intraday here, that means you are choosing 1 hour or 30 minutes, I guess. Then the long term, that one is even more worse. You are choosing 5-4 hours, you see, 6 hours, 7 hours of trade, which is not what we are doing. We are two ball, we are binary traders. We don't need more than the highest you can get on that two ball is 30 minutes, which we don't really need. The highest I think at times is 15 minutes. That's even if I'm not sure if the market is really slow and it will take more time to get. So now fixed time. The fixed time, what the fixed time is for is this. Immediately after you pick your time here, right? You notice something. This is where the timer that you picked shows. And you can see immediately after I clicked it, it started counting down, right? It started counting down. It's going down. So now, if at this 2 minutes 45 seconds is where I enter the trade, it will give me 2 minutes 45 seconds, not the 3 minutes anymore. Are you getting me? It will give me 2 minutes 45 seconds and not the 3 minutes anymore. But if the fixed time is 1, this will be fixed. Anytime I enter the trade, I'm getting 3 minutes fixed. Are you getting me? Anytime I'm entering the trade, I'm getting 3 minutes fixed. That's what the fixed time is for. If it's off, it counts down. Anytime that is left here while you enter the trade is what you are going to get. So now here is the amount you are putting out of your whole account. This is where the money you have in your account will show. Here. We have this is the demo right now. It's not the project. I'll show you another one very soon. So here is the amount you are going to enter out of your money, the money you are willing to risk on that particular trade. I don't advise people to risk more than 2 to 3% of their account. A lot of people want to double their account in that one trade or two. So do 2 to 3% per trade, and at the end of the day, you'll see you'll be profitable. So instantly, after you've chosen the amount you are trading here, right? You will see the profit you are making on that money you're putting here. That's what you are getting additional to what you are putting. So now if I'm putting $10 on this trade and I'm getting 7.5 USD, that's 75% of that amount. I'm getting a total of $17.5 if I win the trade. But if I lose the trade, my $10 is gone because that was what I was risking in the first place. Now, how did this $7.5? Why is this $7.5? That's because if you check your currency right here, on the right hand side of those currencies, right, you can see that the percentages are different. We have 75%, 60%, 75%, 50%. So if you choose a 60% trade, your $10 will give you $6, not 7.5. So depending on the percentage that particular pair is paying at that time, that's what the profit you are going to get. So that's why whenever you want to trade, what I do whenever I want to trade is I come to my broker platform first. Then I check the currency pairs, the pairs that are paying more percentages. Those are the pairs that will go and do my analysis on. So I won't do my analysis on all the currency that then I now come here that the currency I'm seeing the perfect setup on is actually paying me 60%. Anything lower than 70%, I don't trade it. I trade 70% higher. At times you come here and you see 85%, 90%. At times it can be like that. But anything lower than 70%, I don't trade it because it's not worth the risk I'm taking. If I'm risking $10 and I'm only getting $6, to me is not worth it. Some people trade it. Some people will not just go lower than 60%, but some actually their own limit is 60%. Depends on what works for you. So anything lower than 70. So once I come here and I like, okay, maybe let's say right now I'm about to trade. I know I like usually trade around this time, but let's say right now I'm about to trade. I check for though I can see the highest is 75. So I check for all the 75%. Those are the pairs I will go and do my analysis on my trading view. Those are the pairs I come here to do my analysis on and take my trade. Now, let's say you are on UJ right now, and we are at this particular point right now, where a former resistance is now a support. So you are willing to take the trade on that UJ at this 1.09. On the right hand side, you can see the numbers on the right hand side whenever you are open, right? On this 1.09.029, that's where you want to take the trade. That okay, this market, the support is going to push the market up, right? So when it comes to your broker's platform, you choose the UJ. You choose the UJ, USDJPY, which you have done your analysis on at that moment. That okay, this thing is going to go up. This thing is going to go up at that point. So now once you come to, we are assuming this is the time right now, right? So once you come here and you check the line, you check the price where you want to take your trade. Once you enter your broker's platform and you press the UG, you enter the amount you want to put. And once it reaches 109 is there, right? And the one you check was 0.29. Okay, let's even say, okay, you are going for a push. Maybe you saw a resistance. So you are saying, okay, this market is going to go down, right? And your analysis is telling you once the market reaches 350, 109.350, you go for a put. That's where the resistance is at. So once you choose your UG, you've chosen the amount. Once you see this thing that is moving, you can see the line is moving up and down. You can see this is moving, right? It's moving up and down. Once you see that it's above 350 right now, you press this your put right here. Once you press the put, then you have entered the trade at that 353, and you entered for 3 minutes. So at the end of that 3 minutes, you are saying this market will not be at 353 anymore. It will be below 353. So if at the end of the 3 minutes, the market is above 353, you've lost your money. But if it's below 353, you won $16 in total. The market is at 347 right now. So right now you will be in profit, assuming you took it at 353. So in the next 3 minutes, you are predicting that this market will stay below 353. I'm saying 353 as the last 3 digits of the 109. You see, it's 109.345, right? I'm saying the last 3 digits.
Yeah.
So let me actually show you how the trade looks like. Let me go to a pair where I can actually take the trade so you guys can see. Let's check something out. Let me see if I can see any trade right now that we can just use for example. Okay, now I can see Euro JPY at the resistance right now. So now I come here, I select my 3 minutes, right? I select my 3 minutes. So I put the amount I want to put. Then I select the Euro JPY here. And I do my put. I'm taking the trade actually. So now you can see I took the trade at 509, right? You can see there's a red line on that 509. You can see there's a red line and the market is actually going down right now. All because I came here and I saw this market at the resistance. It's going down. That's just an example. So that's just it. You see that after your analysis, you take the trade at where you believe is either going up or is going down. When the market is going down, you press a put. When you are predicting the market is going down, you press the put for that amount you choose. But when you are believing the market is going up, you press the call. Right now, we are believing the market is going to go down. That's why we do the put. And this is where our 3 minutes will end. You can see the market is moving towards that. The moment the market reaches this dashed place, that's where our 3 minutes ends. So if this market is below this line, by the time it gets there, we've won the trade. But if this is above, we've lost the trade. It's just that simple. So here is where you see the trade that you are taking currently. We took it at this time, our expiring time will be here. We took it at this price. This is the price that it is at the moment. This is the amount of money I put inside. This is the payout I'm going to get, plus the 60%. You can see it is out of profit right now and back in profit. So the moment you are saying everything that is happening in the market will reflect in here. So now this double up right here, right? If I am taking the trade and the trade is going against me, right? For example, now let's say this market actually is going up, then I'm seeing another resistance right here. That okay, maybe it's not actually going to go down here, maybe it's actually going to go down here, and I want to take another entry here. Once I press the double up here, if it's actually still showing, it's going to take another trade for me here with the amount I entered it in the first place. So now this trade is about to clear right now. But there was a trade running where I clicked that double up, right? So any amount that I'm actually risking at that particular time on that trade will be the same amount it's going to help me take the other trade with. So it's going to re-enter for me here. Another line will show here, right? With the same amount the former trade is at. That's what this double up is for. Okay, the trade is going against me, but you believe it's actually going to go higher at that particular time. You believe, okay, maybe I was a bit too early in the trade. Maybe this is where it's going to go down. So you enter here. Both we actually end at the same 3 minutes. For the remaining time that is left for this trade will be the remaining time that second entry, your entry, will start with. So the two trades are going to end at the same place, same time. Assuming you double up when the trade, it was a 3 minute trade when you entered, right? Assuming you entered the trade when the trade was remaining 1 minute, that upper one that you took is going to last for that 1 minute. It's not going to start the 3 minutes all over again. It's going to last for just 1 minute. So that is double up. So now this one that we took right now, you can see we won it. It was I just checked the analysis there and I saw a resistance, which is what you see that pushed this market down right there. So that was why I took the trade. I just wanted to do an example of how you do your analysis and how you come here and take your trade and win your trades. Market is on. That was why I took the trade. So that's just what, as time goes on, as we trade together, you will get to understand the broker more. All you need to do. So if you are calling GBP odd, you come here, you click the GBP odd. If I'm saying GBP odd 3 minutes, you come here and click the 3 minutes. The amount you want to take is up to you. You can choose any amount you want to take. That's up to you. You are the one that knows the amount you have in your broker and the amount you are willing to risk per trade. So if I'm telling you GBP hold, go for a put at 089. I'm calling the last three digits. So once you see this thing that is going up, once it reaches 089, I did not do any analysis on this. I'm just like doing this for an example. I actually want to see a losing trade, so you see the red bar and how the trade is lost. So you have to wait for 089 before you press the put. You have to wait for that 089. It's at 086 right now. So once it hits 087, once it hits 089, you enter the trade. That's how you do your trade. So you are good to do everything yourself. It's one step at a time. You go smooth. So let me just enter here. But you have to wait for the 089. So now I entered at 087 for 3 minutes. You can see the time that I got was not even up to 3 minutes. You know why? Because my fixed time is up, and the time that was remaining at the time I took the trade was less than 3 minutes. So you have to take note of this as well. Anytime you are waiting for a trade, you have to make sure you are checking this. Whatever time that was there by the time you took the trade is what the time you are going to get. So now the trade is against us. If by the time this 3 minutes it's here, this market remains above this line, you are losing the trade. But if it comes below, you are gaining the trade. You are winning the trade rather. So let's see what happens. So the details of the trade that is running presently is down here. We traded GBP odd. This was the price I took 087. The price is at 105 right now, so which is way higher. We went for a put, not a call. This was the time that I started. This is the time that is going to end. This was the amount that I left in. The payout is 0 because I'm not in profit. So the market, this is what you see when you lose a trade. You see that red? That's what is going to pop up. Your $1, the amount you take is gone, and you got 0 USD back. So you've seen an example of a winning trade and a losing trade. So binary trading is very easy. I like binary more. I'm more interested in binary because I don't have to wait all day for the trade to go my way before I make my money. I just need to predict where the market will be in the next 5 minutes, and I've gotten my money and I'm out of the market. I don't have to wait all day to wait for a quick profit or a stop loss. That's just the difference. We are trading the same currencies, we are trading the same market, but the only difference with HFX, binary trading, and Forex trading is we are not staying here for long. 3 to 5 minutes, you are out of the trade with your money. That is all you need to know about the broker. You know the time, you know the amount, you know the gain, you know double up, and you know where the currencies are. So I think if I want you to register and just check around, do a survey around the broker, just get used to it because this is where you are going to start making your money. You have to be familiar with it. there are a lot of mistakes on need to make when they come here. Some when once they enter, they forget to like change the limits. Some at times they once they enter you see $10 there. So some they forget to change the amount they are
Mhm.
taking. Maybe with the rush, maybe they saw the market, maybe they are doing their analysis and they saw the market at the resistance at that moment and they just want to take the trade in the haste to get. So once they enter, they just press the put or the call. So a lot of mistakes happen there. So they take it for that 1 minute that they need there and the $10 that they need there. So you have to get used to the platform. So you can see the resistance that
So,
will
but
put the traders.
which one do you advise? Is it this IQ sense or the binary
I
sense?
will send you the link. So you can see the resistance where we took the traders the other time. You can see it's actually going down deeper and deeper. So that was the JPY that we took for example the other time. You can see it's going deeper in profit. So now it's going more deeper. It's not going to increase the money we get. We are still getting the same amount of money. That's just the thing about binary. All we need is we took the trade around here. We need the market to be below by the time our time that we chose is up. So that's just a simple explanation for binary. So now you understand what binary trading means. That means what how their platform works. So now we'll go to the analysis on how to know when to take a call or a put, which we will do on the next session.